Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I got a top stock pick for you for this week. They're reporting earnings, so let's get right to it. The name of this stock is LiveRamp. LiveRamp, and the ticker is RAMP, R-A-M-P. Now, it's Zacks rank number 3 right now, possibly because earnings estimates haven't really moved here, and the company is going to be reporting after the market closes on the 22nd of May, and we're filming this on the 20th of May. All right, it is an A for growth and a D for value, and as aggressive growth videos go, I love to see that divergence because that means I am getting a growth stock. Is something that growth investors are concerned about, much more so than value investors. It tells me I'm on the right path right away. So this is one of these programmatic advertising entities that helps companies do that, that are looking to spread the word about their product or service across the internet in many different ways. We've seen a lot of strength from a lot of these names over the last 3 months. So looking for a good report from a ramp on, what would that be, Wednesday night. Although the earnings ESP right now is 0, suggesting that the analysts have not changed their estimate here just in front of the number. Still, the sector's been doing very well. All right, let's look at all the numbers that we normally look at. We're going to go through this kind of quick. They've been beating the number consistently. Although the beats have somewhat shrank in percentage terms, they are their run rate here is looking a lot better, going from 32 cents, dipping to 29, up to 43, then up to 47. So we like that on an absolute basis. Where are estimates right now? And we can see this is why it's a Zacks rank number 3. Estimates really have not moved here over the last 60 days at all since the company reported last. So, estimates are holding still. But we know that the company has been beating the numbers, so there's a good chance that they come in higher than 23 cents a share. We don't have a sales estimate for this year. We do have one for next year, and since we can't do the computation, we just know that they're growing. It looks like they're growing. A year ago was 600, and then going up next year to 680. That does imply growth. All right, what are you paying for this stock? Well, 19 times forward earnings, right around that market multiple, the general market multiple. And we see about 10% year-over-year sales growth there, 2.3 times book. So value investors actually are going to be interested in this. 3.14 times sales, which is good to see. And we can see that operating margins have flipped from negative to positive in that most recent quarter that we have results from. So negative 1.4 to plus 2.8. So if we take a look at the chart here, what is the chart going to tell us? The chart tells us that there is good earnings growth, and I can see that via the space between these lines, especially into 2025. At least the fiscal 2025 is coming up rather quickly for them. What else can we see? We can see there's been 4 straight beats. Stock's been on an uptrend, coming back in a little. So a good earnings report could bring this stock all the way up 40, which would be your previous recent high. They can make 40 their new level of support as opposed to resistance. Then you're talking about a stock that could get up into this range in the 50s. Obviously, the earnings estimates are moving in the right direction. I'm a little exaggerated on those lines, but I think it should be pretty good. All right, that is my top stock pick for the week. It is RAMP. And I am Brian Boland, and I am going to throw this now over to Mr. Andrew Rocco.
Hey, thanks so much, Brian, and welcome everyone. My name's Andrew Rocco. I'm a stock strategist here with Zacks Investment Research. I'm also the manager of the Tech Innovators portfolio, and I'm excited about this one today. This is my largest personal position that we're going to discuss. We also do own it in that Tech Innovators portfolio. So let's jump into our top stock for May 20th. So my top stock for May 20th is going to be Coinbase, ticker symbol COIN. It's a Zacks rank #1, which is the highest rating. It's a strong buy. And it's the most prominent cryptocurrency exchange platform in the United States. Coinbase allows individuals and institutions to buy, sell, trade, and store a wide range of digital currencies such as Bitcoin, Ethereum, and many others. And the reason that I like trading the stock is when it goes, it really trends nicely. The patterns repeat in it, and the fundamental story is actually improved since we initially started talking about it kind of early last year. So the last time we traded it, we did make 58% on trade. Hopefully we can replicate that this time. So let's jump into a little bit further into why I view Coinbase as a strong name over the next, let's say, 6 to 12 months. So #1, Coin is a cash cow. Seth Klarman, he's a legendary value investor. He's a billionaire, and he's one of the highest earning money managers in the world. In an interview last year, Klarman stated that he avoids crypto, but he sees value in Coinbase, saying Coinbase is sitting on $5 billion in cash, has less than that in debt, and is doing some smart things. Well, now that number is actually ballooned to over $7 billion in cash. So Coinbase has a real business. It's not just following the hype of crypto. They're bringing in a ton of cash. They don't have too much debt. And I bring this to your attention because not many people who are trading a stock like Coin are probably understand how fundamentally sound the company is. So if I'm trading in a little bit of a more risk-on industry such as crypto, I want to see that they have a strong balance sheet, and Coinbase certainly fits the bill. Now, Klarman is known for being a value investor, and let's look at the valuation of Coinbase. From a price to sales standpoint, it's about 14 times, which is very reasonable. And I think as it grows, that number will actually shrink. And we're going to talk about Coinbase's growth prospects a little bit later, but I look at this as a GARP play, which is a growth at a reasonable price. We get a little bit of that valuation. We have the strong balance sheet as far as the cash hoard goes, and I really think their growth is going to continue and even speed up in the coming years here. So now, let's talk about the EPS surprise history, which is one of the best in the market right now. The leading crypto exchange, they announced EPS of $4.40. That's versus estimates of $1.07. So more than 4 times what the street was estimating is what Coinbase delivered when they reported their earnings a couple weeks ago. So that kind of beat in a widely followed company like this is pretty rare. And I just wanted to read a snippet of the EPS transcript that I found online. They said, our financial performance in Q1 reflects our focused execution on product expansion, ongoing operational discipline, and a strong crypto market. We generated $1.6 billion of total revenue, $1.2 billion of net income. Adjusted EBITDA was $1 billion, more than we generated in all of 2023. So in the last quarter, they generated more than they did in all of the previous years. So very, very impressive numbers. Lastly, we continue to drive regulatory clarity for crypto through grassroots advocacy, pushing for legislation and ongoing efforts to seek clarity through the courts. Now, this has been kind of one of the, I'd call it a pebble in the industry's shoe, but no one is doing more to push back on the regulation than Coinbase. And you can see that they're succeeding. The crypto Bitcoin ETFs did get approved. The stock has been moving up, even though they've been entangled in these legal battles with the SEC. And they've been winning a lot of the legal battles, as has the industry. So I think we're turning an important corner. People are realizing, especially regulators are realizing, that Bitcoin and crypto is inevitable. It's better that we regulate it. It's better that we make these regulations clear. And I think we're turning an important corner as far as that goes. So that could be actually a bullish catalyst for the stock. As I mentioned, Coinbase has not only beat the street's expectations, they've smashed expectations. We can see that over the past 5 quarters, the average EPS surprise is 364.63%. It's rare that you see numbers like this. So they're not only consistently beating, they're overwhelmingly beating the street's estimates, which is exactly what you want to see. Now, beyond just beating estimates, we look at what the future holds. And through numerous 10-year back tests here at Zacks Investment Research, we found that the recent trend of consensus EPS expectations is the most telling way to predict a stock's next move. So as you can see above, several analysts that we track have bumped estimates up for the next 2 quarters and the next 2 full years. And they're not just small bumps. You can see for Q1, 60 days ago, the Zacks consensus estimates were 39 cents a share for Q1. Now they're expecting $1.11. So 184% trend of estimate revisions. Again, very, very healthy expectation. Now, one of the newer and bigger catalysts for Coinbase is the spot ETFs, the Bitcoin spot ETFs. There were 8 or 9 of the Bitcoin ETFs that were approved. And one of my favorite sayings, it's not related exactly to this space, it's just a general saying, but it's slowly at first, then all at once. And that seems to sum up the rush for big institutions to get a piece of the crypto space. A bunch of these institutions, they rolled out the Bitcoin ETFs. And how does Coinbase benefit from the Bitcoin ETFs? They're the custodial exchange for almost every Bitcoin ETF. So as those Bitcoin ETFs get more popular, Coinbase is going to get more fees. And I actually just read something that the Wisconsin State Investment Fund, they bought 99 million worth of Bitcoin spot ETFs. And in the recent 13F disclosures, which is the institutions over 100 million, they need to disclose their positions. 600 institutional investors revealed positions, including Morgan Stanley, JP Morgan, Wells Fargo, and Millennium, which invested nearly $2 billion, just Millennium alone. So it's a who's who of Wall Street just trying to get a piece of the action in Bitcoin. And think about it, if these well-known names, even if they take a 1% allocation to Bitcoin, it's going to be a huge win for the industry. And as the industry wins, so does Coinbase, because they are the most popular exchange. And here's a visual representation. Again, the Bitcoin ETF launch was the most successful ETF launch in history. It was like orders of magnitude more successful than the gold ETF, which was the previous biggest launch. And here's a visual representation showing that though momentum waned a bit after that initial launch, we see just over the last couple of days, the inflows are picking back up and institutions are showing continued interest in gaining access to Bitcoin. Also, something that not too many people are talking about is Ethereum. Ethereum is likely to be, institutions are going to be able to launch Ethereum ETFs, is my opinion. I think it's about an 80 or a 90% chance that the SEC, since they approved that Bitcoin ETF, I believe Ethereum's next in line. And once again, Coinbase will benefit. And I assume that they'll be the custodial exchange for a lot of those ETFs as well. So there's just so many bullish catalysts for this stock. It's honestly hard to cover all of them. And finally, we always like to take those fundamentals, combine them with strong technicals so that we have every advantage. And legendary speculator Jesse Livermore once said, Wall Street changes, the pockets change, the suckers change, the stocks change, but Wall Street never changes because human nature never changes. So one of the most powerful patterns that I've traded throughout the years is this falling wedge pattern. And I like to look at the past of a stock to gain insight on the future. And what you can see is Coinbase, it tends to trend up nicely, pulls back in this orderly fashion, kind of rocks everyone to sleep, and then it breaks out. And as I said, it's a very liquid stock. The institutions love to trade it, and you can see how well that it trends when it breaks out of these small consolidation areas. So Coinbase, once again, it's giving us that, that pullback that's uniform. If we break above, I would say, last week's high, I think the next trend higher will be starting. It's already showing relative strength here. I'm talking on Monday. This morning, it's showing relative strength versus many other stocks. So the technicals are strong, the fundamentals are strong, and we're looking good on both of those fronts. And then finally, you can't talk about Coinbase without talking about Bitcoin itself, because it's going to be correlated to a lot of the outside industry. And over the past year, Bitcoin has shaken off lousy news such as the FTX collapse. It's climbed the proverbial wall of worry to double in price. And then last month, we had the halving event. And this event occurs approximately every 4 years, reducing the rate at which new Bitcoin are created by hacks. So this is the thing that makes Bitcoin unique, is that unlike the US dollar, unlike most of these government-issued currencies, there will only be a limited amount of Bitcoins ever printed or minted. And the first three halvings produced gains of 9,000%, 281%, and 562% 1 year later. Not only that, presidential election years tend to be very bullish for Bitcoin as well. So in 2012, 2016, and 2020, that election year all resulted in triple-digit gains for Bitcoin. And then we're starting to see more adoption. So MicroStrategy, MSTR, and their kind of eccentric CEO or former CEO, Michael Saylor, they were the first company to adopt the Bitcoin standard. And the stock has climbed 750% over the past 5 years. Nation states are starting to accumulate. For example, El Salvador, they're on a Bitcoin standard. And most recently, we saw Square, which is now called Block, ticker symbol SQ. They're going to take a portion of their profits and they're going to put it into Bitcoin. So we're actually starting to see the long-awaited mass adoption by institutions. It's becoming real. It's becoming obvious that these institutional investors are going to want a piece of the pie in Bitcoin. Even if it's a small part of their overall asset allocation, it will make a big difference for Bitcoin in the next year or so. So that's why we're bullish here. So that wraps it up. Again, my top stock was Coinbase, ticker symbol COIN. I'm Andrew Rocco, and thank you all so much for watching. Have a great day.